everyone, welcome to our next topic. In this topic, we'll see introduction to input tax credit means ITC. Under that, we will cover what is an ITC, how to claim ITC, condition to claim, who can claim ITC, condition to claim ITC, time limit for claiming ITC, item on which ITC is not allowed, document required for claiming ITC, and how to claim ITC. So first, what is input tax credit? So input tax credit, you pay the remaining amount and deduct the tax you have already paid on input when paying output tax. Okay. So mean that let me explain you. Like you have a purchase something. For example, you have paid purchase a goods of 1,000 rupees. Okay. In that you have paid GST plus GST. Okay, you have paid 18% of GST in the purchasing of a sales of a good. Okay, you are take deduct you have sales 1,000 rupees sale of goods of 1,000 rupees. Okay, in that you have add 80% GST, that is 180 rupees. Okay, and you have purchased also, you have purchased, when obviously you purchase that good, then you can sell to the other customer. So you have purchased goods that cost will be 500. Under that you have also paid a GST, 18% GST you had paid to your vendors. That is 90 rupees you have paid to your vendor. Okay, and at the time of sales, you have get a GST from your customer is 180 rupees. So you have to minus 180 minus 190 rupees, which are your input tax, and output tax is 180. So once you minus 180 output tax minus input tax, that will be 90 rupees, which you need to be deposit to the GST government. So that 90 rupees is your tax, and input tax, which is 90 rupees, it is your input tax credit, which you have taken a credit for your output tax. Okay. So for how to do this? So you are responsible for paying tax on purchase. Purchase, when you purchase anything, you have paid tax to your registered dealer for goods or service. Okay. And when you sell anything, you collect the tax, and that amount will be called output tax. When you pay the tax for on purchase, that will be called input tax. When you collect the tax for the sale, that will be called output tax or tax on sale. Okay. So at the time of deduct from a tax paid, when you pay the tax to the government, at that time what you do, the time of purchase, the purchase means input tax and output tax, you deduct for output tax to input tax means output tax minus input tax, and the remain tax, whatever the remain amount will be, you pay to the government. So that whenever you purchase something, at the time you pay a tax, that is called input tax. So you can input tax, you can take in credit and utilized as for your tax payment, for your tax payment. For example, I just given you example that you have to pay tax for sales 500, means in output tax is 500, input tax is 350. Then you have to minus 500 to minus 350. It is 350 is your input tax credit, which okay, and the remaining amount you have to pay. No, you no need to pay 350 to means 500, total 500 to the government. You can take an input tax credit minus of 350, rest amount you have to pay to the government. Who can claim ITC? Whoever person, a person who are registered under GST can claim ITC. Okay, but the requirement are to wait. You have to you have the GST registered, the registered person under GST, they have to be, the tax invoice should be with the dealer, specified item or service has been obtained, there have been filed return, they provide, provider has already paid the government the tax that has assessed. ITC claim for item received in installment are only eligible to made upon receipt of the final lot If depreciation can be claimed on tax compound or of a capital good, no ITC will be permitted. Means what it is that you have with you have to be tax with you. There's it must be a tax invoice with you. Okay. In the tax invoice, the item, goods and services be specified, which the goods or services there. Okay. Your vendor need to be filed return. Okay. Means your vendor need to be paid return. So when he paid the return, when he filed the return, at that time he paid to the government. If it is not paid to the government, you cannot claim ITC on that invoice. You have to tell to your vendor to file that invoice to the in the GST. After that, you can take the ITC claim. Okay. ITC claim for item receiving installment. When you receive item installment or paying an installment, when you receive final lot, when you get all the items with you and the installment payment is done, at that time you can pay, take the input tax credit. If depreciation, if you're claiming depreciation on tax component of a capital goods like fixed assets or anything in a capital goods, then you cannot claim ITC. Okay, ITC cannot be claimed for personal use and in the GST composition scheme. ITC cannot claim if by a person enroll in, if any person enroll in GST composition scheme system, then they cannot claim ITC. Condition to claim ITC under a GST. So same condition, you have to be a valid tax invoice with you for claiming a ITC. Acquiring a good or service, the creditor can be utilized following recipient receipt requested for good and service. They applied scenario is a billing and shipping address differ. Okay. Acquiring good and service, lot oriented eligibility. Input if input are received in a lot, the credit can only be used once the final lot are installed in receipt, as I mentioned. Okay. And the promote payment of supplier within 180 days of the invoice date, the supplier must receive the payment from the amount of the product or service plus taxes should be there be a default. If the recipient output tax due will be increase the credit amount together with interest. The credit may be reclaimed once after the payment is made. Means you have to be with you valid tax invoice. In order to eligible credit, the registered person must have a present a valid tax invoice. Okay. Then acquiring good or service. The creditor can be utilized following recipient's receipt for the request of goods which are recipient have received for the request of goods or service. They have received some receipt. Okay. Where recipient has received some receipt for requesting of goods and service for this, then that acquiring goods and service, that receipt you have to be with you. This is applied in a scenario where billing address is different and shipping address is different. Like Amazon, you are ordering goods. Okay. For your sister or your mother, father, anyone. Okay. And in billing address, it will be your address and shipping address is different. You are shipping your to the like to another state or any other city or any other place. So that time that receipt is need to be required for the claiming ITC. Lot oriented eligibility. If you are getting an input receipt in a lot, you are getting a lot input receipt, and the credit can be only used when when you receive a lot, you have a agreement with your vendor that you will get 10,000 of lots, okay, of a goods lots, and but it will become under a some division like first slot will be 5,000, then 5,000. In this way you are getting the lot. So once your final lot means last 5,000 lot, when you get that, all total amount will be 10,000. Then when 10,000 lot is completed, then that time you can eligible for ITC claim. Okay. Promote payment for supply within 180 days. The invoice dates from the invoice date within 180 days, you have to pay to your vendor for product or service plus tax. If you have not done, then in that interest will be added to your invoice, and at the time of when till then when you have not done, still interest will be added, okay, together with the interest, and the credit amount will be increased. So you can reclaim that credit amount once you paid the amount to your vendor. Okay. The limit of claiming ITC under GST. So there are deadline for filing ITC claim under GST. So there's a two date list, whichever is earliest. First, the deadline of submitting that financial year's annual return, when you are deadline, whichever deadline is given by the GST government, that financial year annual return you are filing, that time you can claim ITC, or November 30th of the filing fiscal year that following the one of which the invoice related. Okay, for example, XY crop, a buyer want to claim GST was made on purchase with the date of 8 December 21. Okay, the two dates are following. Established 30th November is 20, means you can claim your ITC 30th November 2022, or the deadline of submitting financial year 2021-22 GST means annual GST return filing, when you are doing annual return GST filing on in 31st December, that time you can claim ITC. Note, the former mention need to be debit note must be taken into account with the regard of the debit note itself. If the deadline submitted ITC for turning earliest of the two date XY crop, they claim ITC in any tax month from April to October, while the deadline being 30th November. So being 30th November, anytime you can claim your ITC. Okay. And if you are getting a debit note itself, to note that original invoice also be attached at the time of debit note. Item on which ITC is not allowed: motor vehicles and convenience. For that, ITC is not allowed. Which vehicles? Vehicles used for passenger transport with a seating capacity fewer than 13 people or less than 13 people are not eligible for ITC. ITC is offered if this car can accommodate, means more than 30 people can seat, more than 13 people seat in the car, then at that time ITC can claim. But 13 people or less than 13 people seating capacity is there, then ITC cannot claim from buying motor vehicles. Okay. In additionally, IT is not accessible for airplane or ships. Okay. So such an exemption ITC is not allowed in a below cases: supply of other vehicles or convenience vessels or aircraft. If you are in a business of a supplying car, ITC will be available. Means if you are if you're doing this supply of a vehicles, conveyance of vessel or aircraft for your business purpose, then you can claim ITC. Transportation of passenger, if you're providing transportation of passenger, you have provided transportation to one place to another place of the passenger to go, then you can claim ITC for vehicle purchase on, will be allowed on the vehicle which you have purchased a vehicle, like you have purchased vehicle for a transportation of a passenger. That time you can claim ITC on the vehicle. But if you are purchase that vehicle for your personal use, that's or good transit, then you cannot claim the ITC. Okay. Imparting training on driving, flying, navigating such vehicles or convenience or vessel or aircraft respectively. Means you have purchased a car for providing a driving, car driving, flying, navigating such vehicles if you are purchasing. So a driving school purchase a car, giving a training to student. So they can claim GST. School can claim ITC on GST paid on the car. Okay. Transportation of goods. ITC will be allowed on motor vehicles and other convenience. used to transport goods from one place to another. Okay, means ITC allowed to move on motor vehicles which are used to mm, transfer goods from one place to another. This is concerning other transport and not good transport agency. Means it is the other transport, not GTA. GTA will be not GTS ITC claim GTA, we can claim GTA, ICC in GTA, but their rule and condition is different. I've already explained in previous chapters, so you can go and check out the videos that for GTA. Food and beverage, outdoor catering, beauty treatment, health service, cosmetic, plastic surgery. Excepted when an inward supply of a goods or service or both particular category is consumed by a registered person for making an outward taxable supply for the same category of goods or service or both element of taxable composite or mixed supply. Means it is food and beverage is a composite or mixed supply. Outdoor catering same is beauty treatment is also composite or mixed supply. Health service cosmetic plastic. If it is exempted if it is a composite or mixed supply. Okay. ITC available in respect of food and beverage or health service where the provision of such goods or service is obligation for an employer to provide employees under it. Means you can claim a ITC on food and beverage or health service when employer provide that service to his employees. Okay, that time you can claim a ITC. Okay, but if you are using this food and beverage, outdoor catering, beauty treatment, health service, cosmetic, plastic surgery for your business purpose, then you cannot claim ITC. For example, Mr. A purchased a cosmetic cream to supply to its customer, then ITC no purchase will be allowed. On purchase will be this a purchase cosmetic cream to supply it to a customer. Okay. He purchased a cosmetic cream to supply to its customer. We want to supply that cosmetic cream to his customer, then it claim a ITC. But if we use their inward supply for goods or service or both particular category consumed by registered person making outward tax supply of the same category of goods, then taxable composite or mixed supply. If it is taxable or composite supply, then ITC will not able to claim. Okay. Service of general insurance, repairing and maintenance. When it is come to general insurance servicing, repairing and maintenance of automobile, boat, aircraft, then there is no ITCB allowed to be claimed. Sales of membership club in a club, health, fitness center, there will be no ITC available for club, gym or other membership cost. Example, the corporation pay the due of for Y, the managing director, to be a member of the club. Neither Y nor the composition will be able to access ITC. Means corporation has paid due of for Y, the managing director, to member of the club. But Mr. Y or not the corporation will be able to claim the ITC. Rent a car, life insurance, health insurance. Any service that is Indian government mandate an employer supply to its worker in accordance with the currently enchanted law. For example, let's say the government required all firms to offer a taxi service for female employee working in a night shift. This government had given the legal notice to all the firms that you have to offer taxi to your female employees who is working night shift. When it is female employees work night hour, ABCD Limited provided transportation for the rent for them by renting a taxi. Means ABCD is a traveling transportation company who provide the renting tax to the company. So ABC Limited will be thereafter. He is liable to claim input tax credit on GST that was paid on the tax service for tax service which are basically given a rented to the company to your company for the providing a tax service. So he can claim the ITC. Okay. If the category belong to the mixed or composite supply, or if it is the same or both of the outbound and inbound supply. For example, XYZ travel, borrow a car for ABC travel, XYZ can they make the ITC claim for the same? Okay. Travel. When it is come to travel and benefit like leave, home leave, travel allowance that are given to employees when they are on vacation, means at the time of vacation, employers give a benefit of leave, home travel allowance, then company not able to claim ITC. Work contract. ITC would not be offered for any service provided under a contract. ITC cannot be claimed for building an immovable property unless the input service is used for contract service related to additional work. Work contract ITC would not be offered any service which is provided under a contract. ITC cannot be claimed for building of any movable property unless IT service used for a contract service related to additional work. Construction and immovable property on own account. For product or service, you use building an immovable property for his own account. So that time you cannot claim ITC. ITC will not be offered even if the such product or service utilized for promote business. However, the machinery plant exempted for this requirement. Okay, for input used to produce machinery and plant for internal use, ITC is offered. Means if you are using immovable property for his own account, for your own account, then you are not able to claim ITC. But you will not be okay, even if such product or service which are used for promote business, at that time also you are not able to claim ITC. But machinery or plant are exempted for this one. For the machinery plant, you can claim ITC for the internal use. For example, for its headquarters, Ajay Steel's industry built an office building. ITC would not be accessible for building an office building. In order to make a steel, Ajay Steel industry build a blast press. Since it is means for building a steel, they have to build some blast. That time, ITC will be accessible for that plant. Composition scheme, no ITC will be claimed under the composition scheme. ITC for non-registration and registered residents. Sorry, ITC for non-residents. So ITC cannot be availed for good or service received for by non-residents taxable person. ITC only available on any goods imported by him. Means ITC non-residents cannot claim ITC, but they can claim ITC only if it is imported by him. If any goods imported by him, that time they can claim. ITC for personal use, you cannot claim ITC for your personal use, not for the business purpose. Document required for claiming ITC, so say you need invoice, debit notice, means debit note if any, in entry level bill of materials, an invoice issue in a specified condition such as less than amount 200 and reverse charge. That time you have to raise invoice. That invoice you have with you. An invoice on credit note, invoice or credit note that supplier this is service distributor issues. Okay, a bill of supply provided by the company offering the product or service. This things you have. This invoice you need to be invoiced. If you have a debit note or credit note, that time debit and credit note will with you. The invoice against the debit note invoice, credit note invoice with need to be with you. If you are reverse charge supplier, reverse charge supplier, then reverse charge supplier GST invoice have with you. This document need to be with you at the time of input tax payment. How to claim ITC? So this is a method to claim ITC. Submit monthly GST return. Means you have to file once you file GST 3B outline for then you at that time you can deduct input tax credit from output tax credit and you can get your input tax claim. Check ITC specify. Check the input tax credits form GSTR 2B, which is a statement that automatically created based on the return of your supplier. Means your vendor have filed the GST 3B. When they file the GST 3B, that statement will be goes to the GSTR to your GSTR 2B. So in GSTR 2B, you will can see the statement that your all the vendor has submitted the had paid the GST for your purchase. If it is something is missing from that, you have an invoice but that is not displaying GST or 2B, then you can talk to your vendor and told them to file that in the next GST filing, file that invoice. Reconciliation. Okay, reconciliation, any discrepancy between information from GST 2B and your claim ITC should be disparities be discovered, rectify them, ensuring monthly tax return. Means you can rectify that at the time of reconciliation. Correct excess claim. Pay the excess amount plus and relevant interest and penalty if you claim more ITC. Okay, if you are claiming more ITC, then you have to pay the excess amount with the interest and penalty. Special note for tax paid eligible, ineligible, and reverse ITC section are found in table 4 of GS form GSTR 3B, which is where regular taxpayer must be declare their ITC in order to for their GSTR 2B to correct match the purchase register. Taxpayer must make sure that their claim ITC is reflected in it. Means whenever you claim the ITC, you have to make sure that in GST or in your GST or 2B that all the invoice, all purchase invoice are showing. If you are claiming any ITC, which are any ITC you have claimed, but it is not showing in your GST or 2B, then it will be excess amount you have claiming, then you have to pay the interest or penalty for that. So I hope you have understand input tax credit. So do you have any question or you want to reach us, you simply email us info@skillanything.com and or contact in this number. Thank you so much for watching the video.